I just made my first $500,000. I want to know the secrets.
Wait, half of a $500,000?
Half million.
Half of
It's
a
like
half?
half calf. It's like $500,000.
Half of a half.
So,
Is that like an eighth?
no,
Okay.
half. I want to know, what are the secrets?
I want to know where the other half is.
No. I don't know what you're talking about. It's $500,000. Where are the secrets of not paying these taxes on this $500,000?
I found it. I've been on the adventure my entire life, and I found the secrets to never paying taxes. I'm going to open up the book. This is the secrets of never paying tax. It says that the wealthy pay the most amount of tax. Hey, welcome to the Tax.Pro Show. I'm Josh Ania with over 20 years experience. I'm glad you've joined us. I've got Jackson with me. We're going to dive into the secrets of the wealthy, or the tax secrets of the wealthy, I guess. So here we go. What do we got, Jackson?
Josh, do the wealthy pay anything in tax?
So the top 1% of income earners in America pay over 40% in federal taxes. So the top 1% pays over 40% of all taxes collected in the U.S. So yeah, they pay a freaking lot of tax.
So how does that work? Because I thought that they had a bunch of secrets to avoiding taxation.
There's always things we can do to avoid tax, right? So the difference between tax avoidance and tax evasion is the thickness of a jail cell wall. So we always have opportunity. We can avoid and we can postpone as much as we legally can. That being said, that doesn't mean that you're never going to pay any tax. That doesn't mean that the wealthy don't pay tax. They absolutely do pay tax. Yes, they may be doing things where they can take advantage of different write-offs and different deductions that not everybody has access to. And that is true, and we see that. However, even very tax efficient, because of the dollar amounts and because in the U.S. we actually tax the wealthy, regardless of what is said on social media, because those are true statements, what ends up happening is the wealthy pay the most in tax. So we know that the bottom 50% of U.S. income earners pay less than 3% of all taxes collected. The top 1% pays more than 40% of all taxes collected. We have an income tax that's based on income, and the more income you make, the more tax you pay because you have more income, and we tax income. Shocking.
There's clearly people upset about this. Like, where do you think that comes from? Where do you think this anger and kind of, it's upsetting that there are people who make way more than others do, and yet it feels like that they are able to avoid taxation. They're not paying their fair share, quote unquote. Why, where do these come from?
Here's a stat. Here's a stat I want to talk about. Think about this. So the bottom 50% of U.S. income earners earn about $1.7 trillion a year. The top 1% of U.S. income earners pay in tax 1/2 of what the bottom 50% make in a year. So they pay $865 billion in income tax, over 50% of what the bottom 50% make in their annual income per year. Let me say it one more time. The top 1% pay over 50% in taxes of what the bottom 50% earn in a year for their total income. So, total income for the bottom 50% in America is right around $1.8 trillion. That's their annual income. The top 1% pays over $864 billion in tax every year.
It's insane. Do you think that it would be unreasonable to maybe suggest that it's not just, because we're naming a bunch of facts. Do you think that a lot of people, the majority of people, are basing what they know off of feelings?
Oh, absolutely. I think a lot of it's like influencers. I think they are listening to people that don't actually know what they're talking about. People that have never done or worked with the wealthy. They've never done wealthy taxpayers' tax returns. They don't probably even know very many wealthy people that make that kind of money. And also, I think the struggle becomes when you try to define what wealthy is. What is wealthy? It's a very relative term. If you make $3,000 a year, you're wealthy if you make $30,000 a year. It's also a slippery slope. If you make $300,000 a year compared to somebody that makes $1 billion a year, well, $1 billion a year is wealthy compared to 300,000, but 300,000 is way more than 30,000. So it's a comparison game that's dangerous. And I would say stop it. Like, look at where you are instead of trying to figure out, spending all this time trying to figure out how the wealthy don't pay tax. Instead, try to figure out, okay, this is where I am. What opportunities do I have to get to the next level, to get to the next place? For example, over 50% of the US GDP is small business. These are companies with 500 or fewer employees that are truly the backbone of America. It's very easy in America to start a small business. If you want to get wealthier, here's what I would tell you to do. Number one, go get a blower at Lowe's. Number two, get some garbage bags. Your total cost here is less than $200. Then go door to door to wealthy people's houses, because rich people are scared of leaves. And you can then go get their leaves and rake them up and blow them off and put them in trash bags and throw them away. And those wealthy people will pay you, and you automatically are in business. It's that simple in America to start a business. You don't need an LLC. You don't need crazy tax advice. You don't need to spend a whole bunch of time and money and research on that crap. Instead, you just need action. Go do the thing. Buy the minimal amount of equipment that you need to complete the task, start small, and get started. And hard work pays off, man. Hard work will get you where you want to go. And it always makes sense, right? I'll give you an example. Some of the highest tax rates in America, 91%. If I said you're going to make $1 billion, but you're going to pay 91% in tax, that means you will walk away after tax, you're going to walk away with $90 million. Would you take that deal? And the answer is yes. You would take that deal because you still want $90 million is way better than nothing. And that's not a good trade. It's not a good trade to say, I'm not going to work so I don't have income so I don't have to pay taxes. No, that's stupidity. Go work, earn money, be productive, impact people around you, your circle, your closest 10 friends, change their lives. And all of a sudden, you're going to have different quality of life.
So you're talking about getting to the next level. Tell me a little bit more about that. For high income earners, what tax strategies do you recommend?
So if you are making a lot of money and you're not sure what to do, there's a couple of very basic things that you should do right away. Number one, if you have the opportunity, I would tell you to get an HSA account. Why do I say opportunity? You've got to have a health insurance plan that will allow you to get an HSA account. And then I would max it every single year. You don't have to use it for medical expenses. You can just invest that money and save within the plan. That's a really simple thing that you can do. Number two, maybe you're not spending a lot of money in retirement or saving for retirement. This is definitely a simple thing that I would tell you to do. We have a lot of strategy here around how to maximize the dollars and the most dollars you can get into retirement. I'm going to tell you, put your money in a Roth IRA. There's a lot of rules around wealthy getting money into a Roth IRA or a Roth 401k. And it sometimes requires some deeper level expertise. So reach out to a tax pro, reach out to a financial advisor so that you can maximize the dollars that you're putting into the Roth. And I know you're sitting there going, well, the Roth is not deferred, so I'm going to pay tax on it today in the highest income bracket. Well, the truth is the lowest bracket we have is the bracket we have today because of inflation. Not only that, we're sitting on the lowest rates we've had in 100 years. So why wouldn't you go ahead and put the money into Roth and let it grow tax-free? So HSA, Roth, IRA, and or 401k on that Roth, those are simple, low-hanging fruit things that you can do and you can get started with today. Then the other thing I would tell you is figure out a way to contribute to your local group, your local charities, and invest in either nonprofits that are around that are going to impact the next generation. Look for opportunities where you can impact those people in your community that really are going to make a difference. And those are things that the wealthy should absolutely do. And most of them absolutely do. Why wouldn't you do those things?
I really love this because I feel like we get such hate on this. Like seriously, I love to talk about it because it really you're bringing to light that we have the freedom to actually go and make more money, and that we don't live in a country and have a government where you're just capped. Where like if you get up to the highest point, all the money that you make then just goes to the government or it goes to other people. Like we actually have the freedom to go make the money and actually keep it. That's incredible.
It is incredible. It's awesome. And the thing is people don't think about that. Instead, they sit in their mom's basements on the computer, playing video games and not actually doing something with their life. And how rewarding is that? It's not rewarding. Like, go build something that you're going to turn around one day and literally, I'm telling you, it's not hard. You figure out how to change 10 of your closest friends' lives, and all of a sudden, you're going to be able to change the world's life.
You're going to build a legacy. I mean, seriously. Yeah. I totally agree.
Yeah, you're going to leave a huge impact.
Yeah.
I would love to hear some of the things that you believe the wealthy do to avoid tax. Just leave a comment below and give us all the details of how the wealthy avoid tax.
So, Josh, I've got a challenge. I think you're holding me back a bit. Word's on the street that people like Jeff Bezos are making income and are not getting taxed on it by complying with these secrets of the rich, right? For example, they go and make $10 billion and they increase their net worth. How are they doing this? I think that there's a lot of rumors around this, but I want to challenge you. Is it unrealized capital gains that are not taxable income?
Yeah, I mean, obviously, the unrealized capital gains are not income, but most Americans have the same thing. And it's disguised in their 401k, or it's disguised in their own investments. So if you go buy some stock in a company, let's say you buy one share of Apple, and that share of Apple goes up from you bought it January 1st. By the end of the year, the gain has occurred, and let's say that you made $100 on that one share of stock by the end of the year, by 12/31. You don't pay tax on that gain until you sell that stock. And it's no different if you're holding stock in your own company and the value of your company goes up. We don't tax that because you haven't realized it yet. You haven't actually sold the stock and made the money. It's very speculatory. It's a speculation tax, basically. If we were to tax, it would be speculation because we don't actually know the value until you go to try to sell it.
So once they sell that stock or however much money they've got invested in it, then will they be paying tax on that money?
Yeah, if they sell the stock, they're going to pay tax on it. If they give the stock away, whoever they gave it to, the person they gave it to is the basis of the person that gave it to them. So I paid $100 for Apple stock. I give it to you. Your basis is $100. I paid $100 for Apple stock. Now it's worth $10,000. I die. It steps up in basis. You inherit it. You sell it. You don't pay any taxes. Obviously, when you get to guys like Jeff Bezos, they're going to hit limits that are going to make it taxable, regardless. If it's not going to, even if it steps up to fair market value, there's limits on that step up, and so he's going to pay. There's going to be some estate tax there. But regardless, we don't want to tax unrealized gain. That's dangerous because that's speculatory, and we don't tax based on speculation. We tax based on what actually happened. What happened? Most taxpayers are cash basis. There's some that are accrual, but the vast majority are cash basis. So that means we are taxed and we pay tax on what actually happened. You made $2,000, you pay tax on $2,000. And in this case, his net worth going up doesn't mean he received that value. It's perceived that it went up. But just because his net worth goes up doesn't mean he didn't pay any tax. Just means he didn't pay any tax on that capital gain because he didn't realize he didn't sell it. It's still sitting in that investment.
I can see your point there. I think that there's another assumption that can be made though. What about if they take loans out on the investments to avoid taxes?
Sure, they can do that, and that does avoid the tax if they don't sell it, but anybody could do that. You can borrow on the margin and you don't pay tax because you didn't sell the stock.
Is that a smart choice to make?
Depends on what you're trying to do. I don't like it and I don't do it. I have clients that do that, and that's fine. I mean, I'm not mad at them for doing it. It's not the end of the world. I just don't like borrowed money.
Why is that?
I don't like the risk.
Tell me about that.
Well, I just
No,
think
no,
I just think people
I'm
only
just-
look at interest rates, and they only look at whenever they're looking at dollars or loans, they look at interest rates and they look at what their money could make otherwise, and they don't ever look at the risk. Borrowed money is risky.
You're taking on interest so that you can also deduct it, and then you're going to avoid tax.
Well,
It is-
the concept is that
not because
your
you can
your
deduct-
money is
deduct
going
it,
to
but-
earn enough to out earn the interest expense.
Right.
Is the concept, and it could be true. Yeah, I mean, I've seen it happen. I've had clients do it, and it worked for them. I just don't. For me, I don't want to owe anybody any money because it gives me a ton of freedom. It also gives me this thing called cash because it's not leaving to make a payment. And then when I have that thing called cash, I get to do stuff like form a Tax.Pro show. Hey, thanks for joining us today on the Tax.Pro show. I'm so glad you stopped by. Listen, we are here to help spread the word that taxes are not bad, they're actually good, and that you can understand them. If you'll like and subscribe to this show, we're going to help you understand more and more about income tax, financial investing, businesses, and small business, and really try to help move the needle in your life. We'll talk to you soon and see you on the next one.